Namaskar, you're watching BT TV. I'm Tanya Aneja. Well, we all have been talking about mid-cap and small-cap stocks, their fantastic rally, multi-bagger returns. But is it now the time to become cautious? Is the bubble gonna burst super soon? Well, I'm not saying it. The Securities and Exchange Board of India chairperson Madhabi Puri Buch has raised concerns over stretched valuations of small and mid-cap stocks, which are generally favored by retail investors. She said there are pockets of froth in the market. Some people call it a bubble, some may call it froth. It may be appropriate to allow that froth to keep building. Not only that, she added that a bubble will burst because by definition, bubbles burst. So when they burst, they impact the investors adversely, and that's not a good thing. The Sebi chairperson also said that the regulator has noticed signs of manipulation in the small and medium enterprises segment. The regulator even plans to bring in more disclosure on risk factors. Now, recently, the mutual fund industry trade body AMFI also laid out the detailed guidelines on stress tests that small cap and mid cap schemes will have to undertake. It instructed fund houses to submit the stress test results once every 15 days, the first of which should be published by 15th of March. Remember, in 2023, the Nifty Mid-Cap 150 index gave a return of 45%. The Nifty Small Cap 250 index went up by 49%. Small cap mutual fund schemes went up by 41% on an average, and mid-cap funds also, they were up by around 37%. This has resulted in a gush of inflows in small cap and mid-cap funds. According to the experts, the extent of overvaluation relative to history is the highest in small caps, while on an absolute basis, the mid-cap index is the most overvalued. Remember, these stocks, defense, railways and PSU, they were on roll. They were on a roll, and some stocks even gave 200 to 300% return in just 6 months. In fact, assets under management, that is AUM, of small cap and mid cap schemes also hit 2.49 lakh crore and 2.94 lakh crore respectively in Feb 2024. Both are records for the two investment categories. On Monday, the BSE mid-cap and small-cap indices declined 0.2% and 2% respectively, and today also, if you see, they are trading under pressure. Mid-cap is down around 700 points, and small-cap also under serious selling pressure. Now, experts believe that it's now time for investors to get more selective and bottom up across all market cap indices, as the phase of easy and broad-based returns might not repeat. But let's do one thing. Let's also listen in to what Sebi chairperson Madhabi Puri Buch has to say on this small cap and mid cap bubble.
While the desire of the regulator was to be facilitative and to have a listing environment which is not as, I would say, as well regulated as the main board, because small and medium enterprises find it hard to comply with many of those requirements. The objective was appropriate. Are there some entities which are perhaps misusing that facilitative framework? We have received feedback that that is the case. The first step we took, as you know, was many of the surveillance measures like ASM, GSM, which earlier were not applicable on the SME board, have been made applicable there. And the principal objective of that is really to try and mitigate the risk of price manipulation. Having said that, the reality is that these are relatively small entities. The market cap is small, the free float is small. It is relatively easy to manipulate both at the IPO level and at the trading level. So is there something more that needs to be done? I think as a first step, we are clear that some more disclosure in terms of risk factors. So for investors to understand that the SME segment is different from the main board, the regulations are different, the disclosures are different, and therefore the nature of the risk is different. I think it's important for Sebi to underline that in terms of disclosures to the investors. The second is in terms of actual price manipulation, both at the IPO level and at the trading level. We are working, to, I would say, to evidence that we do see the signs. We, as I've mentioned earlier in a press meet, that we have the technology to do it, so we are able to see certain patterns. However, as per our regulation, the way that we need to construct the entire case, we do need to take some time to do that in a robust manner. Fortunately, the market has given us the feedback and advised us on what we can do in order to identify such cases and to deal with them. So I would say we're really quite grateful. The industry is behaving in a very mature manner and assisting us in doing this, because we're all aligned on the main objective. If there is anything which a few isolated cases or a few cases which go bad will detract from the trust of the whole ecosystem. Now, nobody wants that to happen. So I think that going forward, with the assistance of the industry itself, we should be able to mitigate some of the risks which are inherent in this segment. Small and mid caps, we've looked at the data, we've analyzed it in conjunction with the industry. Are there some companies and segments which are being re-rated today? And that's a good thing. So yes, that is also true. But are there others where the valuation parameters seem to be off the charts and not supported, by fundamentals at all, and completely appearing to be, as regulators like to call it, irrational exuberance? So there are pockets of that. So it's not a one-size-fits-all. It's there are pockets of re-rating, which is good. There are pockets of froth, which is not good. So that's why that's the job of the fund manager. And today, of course, we met a number of women fund managers in the industry, almost about 200, how many? 100 plus? 120. Pleasure it was. So that's the approach that we are taking, and it needs to be a nuanced approach, which we are assuming that the trustees will craft. While the desire of the regulator.
Okay, so that was Sebi chairperson on this mid-cap and small-cap bubble, but you can see the impact of the speech on the mid-cap index as well as the small-cap index. If we can pull up that indices for you. So small-cap is down 356 points as we speak, 2.3% downtick there, and mid-cap is also under severe selling pressure. 838 points gone there on Nifty mid-cap 100 index, 1.72% downtick there as well. So clearly the impact of the speech on the broader markets, but let's see how the action pans out, and for that you don't have to go anywhere, you just have to stay tuned to VT TV. Lots more coming up for you, so stay tuned, and many thanks for watching.
Vineet Bojlinkar on Geo Finance. In a market, Vineet, which is trending lower and have